So given the markets, Danielle, there's a lot of speculation whether we are in a bear market rally and it's going to get a lot worse, or that we may have somehow found a bottom here. Where are you on this?
Well, I think I would definitely put myself in the bear market rally camp. One of my mentors, Dr. Lacey Hunt, has always taught that two sectors in particular lead economies in and out of recovery and recession, and that is the automobile sector and the housing sector. We are indeed seeing automobiles come down hard. We're seeing used car prices come down hard, inventories rise, things we never thought we'd be talking about a year ago. And we're seeing housing hit a very hard wall. And it looks to be, despite the fact that mortgage rates have come down, we're continuing to see activity curtailed in housing. That suggests to me that we are still going into recession, as opposed to being able to step back and say, "Ooh, we made it out clear and fine. We found a bottom. Markets don't have any more downside." I think that that's naive.
Well, look, Danielle, I will give you credit. You were 100% right when you were on this show, and you said that there is no way the stimulus does not cause inflation. And you were 100% right when you said that calling inflation transitory was ridiculous. So give me your specific outlook on where you see the U.S. economy going by this time next year. Paint me that picture in as vivid a detail as you can.
So I don't necessarily see, because of the political backdrop, I don't see any major form of stimulus going directly to U.S. households until maybe March or April of 2023, after we have the new Congress sitting in session. If the Republicans take the House, I don't think that stimulus measures are going to look anything like what they looked at like after the pandemic. And that messages to me that if we're already in recession and we're not going to get major forms of relief for the U.S. household sector, that we're going to remain in recession for longer than most people think, that it's not going to be this convenient, shallow and quick recession, that we're actually going to be in it for at least 4 quarters, if not more. We might be coming out of it at this time next year, but I don't foresee a recession being quick and neat, as most sell-side analysts on Wall Street would have you believe.
So you're looking for a deep and prolonged recession is what you're forecasting?
It is. We have more leverage in the system today than we had going into the pandemic, when we were also going into recession then. And more importantly, the rest of the world is in worse shape than the United States is in. We know that China is in recession. We know that Germany is in recession. So you cannot act as if the United States is on an island. It's an exporting nation as well. So we have other factors that are actually worse in terms of a baton handoff than what we had at the end of 2019.
So markets are being a little bit too optimistic at the moment, fair to say then?
Again, I will be the first to say I am wrong if we see a major Powell pivot, and it will be a mea culpa, and I will be slaughtered on Twitter, and I'm fine with that too. But as things stand right now, a man who says, I don't want to be the next Arthur Burns, I don't see stepping back. And if that's the case, and he's going to hold true to tightening and pushing forward, even if it's at a lower rate, then that is certainly not what markets are pricing in today.